Welcome to the deep dive. This week, we're really cutting through the noise, getting to the stories that actually matter.
Mhm.
We've seen some pretty surprising the tech breakthroughs reshaping global digital power
Yeah, definitely.
and revelations about potential hidden wealth right in your own home.
Which is always interesting.
Plus, believe it or not, the comeback of a notoriously infamous festival brand.
Right. Our goal here, as always, is to sift through all the latest sources, articles, data, our own notes, and pull out those really essential bits of knowledge.
Basically, giving you a shortcut to being genuinely well informed.
Exactly. Exploring the connections, the underlying implications. So you don't just know what happened, but, why it matters to you.
And today, we're diving into some really fascinating stuff. We'll look at how these global tech giants are navigating some pretty high-stakes geopolitical tensions.
hmm And uncovering perhaps unexpected sources of personal wealth.
We'll track the latest moves in key market sectors, too.
And of course, break down the Federal Reserve's critical decisions and sort of the ripple effects that flow right into your everyday finances.
Okay, let's get started. So first up, let's tackle this whole evolving landscape of digital sovereignty and global tech. Huge news this week on TikTok.
Yeah, that framework deal finally reached between the U.S. and China.
Right, averting that potential shutdown here in the States.
And a really critical part of this deal is the structure. It's a consortium, basically a group of companies working together.
Oracle, Silver Lake, Andreessen Horowitz, some big names.
Exactly. They're set to control 80% of TikTok's U.S. business. And crucially, Oracle keeps its cloud agreement.
It really shows that balancing act, doesn't it, between, business interests and national security.
Absolutely. And there was that interesting comment from Treasury Secretary Scott Bessent.
Yeah, that about Trump's stance.
Right, saying Trump's willingness to let TikTok go dark was apparently a key factor in getting China to agree.
That's some serious negotiating leverage. So the deal should close in, 30, 45 days?
That's the timeline, yeah. And existing U.S. users will need to shift to a new app. The divestment deadline got pushed to December 16th.
The big picture here for you, the listener, is how national security is actively reshaping, the ownership and future of these global tech platforms. It's changing the digital world you use every day.
And while that TikTok deal is a step, it's important to remember the broader U.S.-China economic tensions haven't just disappeared.
Right. U.S. Trade Rep Jamieson Greer said wider talks are, quote, deferred.
Yeah, which kind of makes you wonder about the long-term stability here and if more friction is coming.
Definitely a point to watch, especially with those potential Liberation Day tariffs, 145% on Chinese imports still possibly looming for November 10th.
And then there's the currency angle. The Chinese yuan has actually rallied 3% against the dollar this year.
Which is partly because the dollar itself has tumbled, over 10%?
Exactly. And some Goldman Sachs analysts are floating this idea that maybe Beijing guiding the yuan higher is a kind of goodwill gesture amid the trade talks.
Especially since the Trump administration wants a weaker dollar anyway.
Right. But there's another side to that coin, always.
Okay.
The yuan has weakened quite a bit against other big currencies. Over 10% against the euro, 5% against the pound, 3% against the yen.
So that makes their exports cheaper in markets outside the U.S.
Precisely. Which helps them there, but then causes trade friction with other partners, like India and Mexico. It just shows how complex these global currency moves are.
And these trade policies, well, they're hitting American industries in really different ways. Take U.S. farmers.
Mm-hmm. Soybeans,
Yeah.
America's top agricultural export, they're struggling. China used to be the biggest buyer, but they haven't pre-purchased for the harvest.
And John Deere is facing $600 million in costs from the steel and aluminum tariffs.
But then you flip it.
Right, those Indiana shrimp farmers.
Yeah, they're doing fabulously, apparently,
Yeah.
because those same tariffs protect them from cheap imports. Over 90% of U.S. shrimp is imported, so.
That protection is huge. So the takeaway for you is how these big, complex global strategies hit everything from national security right down to the price of goods you buy and, the jobs in American industries.
Okay, shifting gears a bit to the AI arms race. It's really heating up.
Google's Gemini app topping the App Store, even surpassing ChatGPT, that's big.
Yeah, and apparently boosted by this photo editing tool, Mano Banana. Sounds a bit silly, but
Hey, 13 million new users, 500 million images uploaded. Clearly it worked.
absolutely. Helped push Alphabet's market cap past $3 trillion. Shows huge investor appetite for consumer AI.
Meanwhile, Meta's making a pretty big pivot, right? Away from VR headsets.
Yeah, seems like it. Towards AI-powered smart glasses. They're teasing these Hypernova glasses.
Around $800, small display, neural wristband for gestures. Sounds futuristic.
Trying for more of a mass market appeal, I think.
Yeah.
Moving beyond that niche VR crowd.
And the rivalry in this space is intense, like the feud between OpenAI's Sam Altman and Elon Musk.
Right, and OpenAI just hired xAI's former CFO. That's a power move.
Plus, OpenAI's valuation, what, $500 billion? And that massive $300 billion cloud deal with Oracle again.
It just underlines the huge amounts of money and talent pouring into AI right now.
And it's definitely global. Microsoft just announced a $30 billion investment in the UK.
By 2028, to build the country's largest supercomputer with knee scale.
Timed with President Trump's state visit and new AI deals, too.
And closer to home, Alphabet's Waymo got a permit for robotaxis at SFO.
Expanding driverless services. Phoenix, LA, Austin, now SF airport testing.
So for you listening, all this means rapid AI advances are seriously shaping your digital tools, how you'll interact with tech, even, how you get from A to B.
Okay, let's bring it really close to home now. Let's talk about, well, your home. For a lot of people, it might be a hidden gold mine they're not fully tapping into.
The data we looked at is pretty striking. Homes bought before 2005. They've seen an average value jump of 90% in the last 20 years.
90%, that's huge.
It really is. To put numbers on it, a median $229,000 home from 2005 is now worth around $435,300.
Wow.
So homeowners who've been there for, a couple of decades could be sitting on just astounding amounts of equity they haven't touched.
Like, how much are we talking?
Well, take that 2005 buyer
Wow.
who put 20% down on the $229K home. By 2025, they'd have something like $336,107 in home equity.
That's, as one analyst said, real wealth you can use.
Exactly. And there are different ways to access it responsibly, of course.
Okay, like what?
You've got home equity loans. That's a lump sum, fixed repayment.
Got it.
Home equity lines of credit, HELCs. That's more like a revolving credit line you can draw on for a set period.
Okay, more flexible maybe.
Can be. Then there's cash out refinancing. You replace your old mortgage with a bigger one, take the difference in cash.
Right.
And for folks with maybe weaker credit, there are these home equity investment agreements. You basically sign over a share of your home's future value for cash now.
Interesting. What do you generally need to qualify for these?
Typically, you're looking at a credit score, somewhere in the 650, 680 range minimum. A debt-to-income ratio, that's your total monthly debt payments versus your gross monthly income, no more than 43%.
That makes sense.
And usually, you need at least 20% equity built up in your home.
So the key takeaway for you listening is really to understand these options, assess the potential in your own home, and think about how you might responsibly use that wealth if you need to.
Definitely. And speaking of homes and money, there's big news on mortgage rates, too.
Yeah, they dropped. The average 30-year fixed fell to 6.13% this week.
Lowest level since late 2022. That's pretty significant.
And it's mostly because investors are expecting the Fed to cut rates soon, right?
Largely, yes.
Yeah.
Anticipation is driving it down. But there's always a but.
Uh-oh. What's the catch?
Well, it raises this question. Will rates keep going down? There's this market saying, buy the rumors, sell the news. Meaning, we've seen times in the past where mortgage rates actually went up after the Fed announced a rate cut, especially if the economy wasn't in a recession.
Huh. So it's not a guaranteed downward slide just because the Fed cuts.
Not at all. So while the dip is nice, you can't assume it's a one-way street.
That's really important context. So if rates could actually rise after a cut, what's the advice for someone thinking about buying or refinancing right now? Act fast or wait and see?
Look, trying to perfectly time the market is usually a losing game. The best advice is always talk to a financial advisor.
Right.
See what makes sense for your budget, your situation. If you see a rate that works for you, locking it in might be smarter than gambling on where rates will be next month or after the Fed meeting.
So basically, understand the dynamics, but make decisions based on your personal finances, not just speculation.
Exactly. Crucial for making smart financial moves, whether you're buying, refinancing, or just trying to understand the economy.
Okay, let's shift over to business innovations, market movers,
Yeah.
because the IPO market seems to be waking up again.
Yeah, definitely seeing signs of life. Cybersecurity firm Netscope, for instance, just boosted its IPO price range.
Targeting what, like $7.3 billion valuation now?
That's the number. It shows renewed confidence, after that period where high inflation and interest rates really put a damper on tech IPOs.
And 2025 generally is seeing a rebound, especially in tech.
It seems so. And what's really interesting within tech is that cybersecurity deals are leading the way in acquisitions right now.
Like Google buying Wiz for $32 billion.
Yep, and Palo Alto Networks buying CyberArk for $25 billion. Big deals.
So for you listening, this gives a good pulse on the hot sectors. Clearly, digital security is where a lot of companies are focusing and investing.
Absolutely. And speaking of big investments, let's talk pharma. Eli Lilly.
Right. They just announced a massive $5 billion investment, a new manufacturing plant in Virginia.
Designed to really ramp up production of targeted cancer and autoimmune drugs.
And this isn't just a one-off thing, right?
No, it's the first of 4 new U.S. plants they have planned, part of a huge $27 billion investment push since 2020.
Wow. Why the big U.S. focus now?
Well, Eli Lilly's CEO, Dave Ricks, was pretty direct. He pointed to the U.S. tax situation, specifically that 2017 corporate tax rate cut.
Saying that was a key reason for expanding domestically.
Yeah, he mentioned it'll actually move some production from Europe to the U.S. because of it.
And while Lilly's famous for Zepbound and Mounjaro, the weight loss drugs.
Right, this investment is also for future treatments, cancer, Alzheimer's, using advanced tech like AI and machine learning in production.
Plus job creation, 650 new jobs, 1,800 construction jobs in Virginia.
So the broader insight for you is seeing how things like tax policy and cutting-edge drug development really shape this major industry, create jobs, and ultimately impact healthcare.
Now, here's a story offering a glimpse into, well, a different world. J.P. Morgan's private bank.
Yes, the new luxury lifestyle service.
Right, for their ultra-wealthy clients, going way beyond just banking.
Offering referrals, discounts, private jets, luxury travel, household staff, art restoration, you name it.
It's quite the package.
And they're also expanding what they call CFO services, things like handling bill payments, aggregated financial reporting.
So like a personal chief financial officer service.
Kind of. It shows this trend where ultra-high net worth clients want more than just financial advice from their advisors. They want help managing the complexities of, well, extreme wealth.
Yeah, provides a really interesting insight into that whole world of wealth management and the kind of services offered at the very top. A different economic reality for sure.
Definitely. Okay, now for something completely unexpected.
You mean LimeWire buying the Fyre Festival brand?
Chuckles. Yeah, that one. LimeWire, the old file-sharing service, now an NFT platform, buying the rights to Fyre Festival. I mean,
it's kind of unbelievable. I thought that brand was toast, permanently.
Me too. But the LimeWire CEO, Julian Zetmeyer, he acknowledged the history. Said, we're not bringing the festival back. We're bringing the brand and the meme back to life.
This time with real experiences and without the cheese sandwiches. That part's key.
Yes, crucial distinction. And Ryan Reynolds' agency, Maximum Effort, backed the deal. He had some witty comment about it, naturally.
It's just such a quirky story, isn't it? About brand resurrection, meme power, maybe even second chances in business.
Even for something as mocked as Fyre Fest. It shows how even notorious failures can have value if they, I don't know, tap into the cultural zeitgeist in the right way.
Wild. Okay, shifting to sports now. Women's volleyball is having a moment.
A big moment. Comcast's spinoff for Sans USA Network just signed a multi-year media rights deal with League One Volleyball, LOVB.
Primetime Wednesday night coverage for matches, that's significant visibility.
It really is, and it reflects some incredible growth stats. Women's court volleyball participation up nearly 7% in 2024.
High school participation hit an all-time high too, right? Over 479,000 girls.
Yeah, and college tournaments are smashing viewership records. The 2024 NCAA Women's Volleyball Tournament was ESPN's most watched ever.
Yeah, the most staggering number, I think. That Nebraska Huskers game in 2023.
Oh, the crowd size. Unbelievable. Yeah. Over 92,000 fans.
92,000. Largest crowd ever for any women's sports event anywhere.
Just incredible. So the takeaway for you here is this really exciting trend of rising investment and viewership in women's sports. It shows the power of growing fan bases meeting strategic media partnerships.
All right, let's land on the big one for the markets this week. The Federal Reserve, their meeting wraps up Wednesday.
And it's pretty much a done deal, right? A rate cut is coming.
Near 100% certainty of a 25 basis point cut. That takes the target range down from 4.25%, 4.5%.
But there's a lot of political intrigue swirling around this one.
Yeah, the new Trump appointee, Stephen Barron, he's expected to dissent, pushing for a bigger cut.
Exactly. Aligning with President Trump's public calls for bigger cuts. And Treasury Secretary Bessent also encouraged a, quote, fulsome cut.
It really highlights that tension, as BNY's John Velas put it, in the Fed's dual mandate balancing jobs and inflation.
And it's all getting more politicized, which complicates things further.
It's such a tightrope walk for them. Given all that political noise, how much does it actually influence the Fed's decision, or at least how the market sees it?
Well, the Fed fiercely guards its independence, obviously.
Yeah.
Decisions are supposed to be data-driven.
Right.
But that public pressure, it definitely shapes the narrative. It can influence market sentiment, even if the core decision stays focused on the economy.
So what are markets really watching for on Wednesday, besides the cut itself?
Two main things. First, the dot plot. That's the chart showing where each Fed official expects rates to go in the future. Will they signal one more cut this year? Two, none.
Okay, the future path.
Exactly. And second, Chair Jerome Powell's press conference. His tone, his language, especially after his recent slightly more dovish comments about prioritizing full employment.
So this single decision, it really hits everything: your loan rates, the stock market stability, and you see all these complex political and economic forces colliding.
Absolutely.
Yeah.
And the global reactions are immediate. European stocks were up initially on the TikTok news, but then slipped back as people digested the broader trade situation.
Asia was stronger, though.
Yeah, Japan's Nikkei hit a new record high, partly on hopes for Fed cuts. South Korea's Kospi also hit a record after their government ditched a planned stock investment tax.
And gold, that was a big move.
Huge move. Spot gold surged to a new all-time high. Over $3,600 an ounce, briefly. $3,699.37 was the peak.
Wow. Driven mostly by that anticipation of aggressive Fed cuts.
Primarily, yes. Gold acting as that classic hedge against potential currency devaluation and economic uncertainty when rates are expected to fall significantly.
It just shows how interconnected everything is.
Yeah.
U.S. monetary policy, geopolitics. It instantly ripples through global markets, impacting your investments, your whole financial outlook. Hashtag outro. So that wraps up our deep dive for this week. What a packed period it's been.
Yeah, definitely. High-stakes decisions, some really surprising comebacks.
And these big shifts in tech and finance that honestly touch every part of our lives now.
From those digital battlegrounds of global trade, right down to the quiet wealth that might be sitting in your own home.
Yeah.
We've covered a lot of ground.
It's clear those lines are blurring, aren't they? Between national security, global business, and this incredibly fast-moving technology.
Yeah, creating totally new challenges, but also new opportunities.
And as we watch all these forces keep interacting, here's something to think about. How is that balance of power really going to shift? As nations and corporations wrestle over digital sovereignty, over AI supremacy.
Right, and what new societal structures or even personal freedoms might emerge from all this, or what might get challenged as these interconnected forces keep reshaping, well, everything about our future.